Hello everyone, my name is Mark Newman. Today I want to talk about the tax breaks that are available for businesses that buy electric vehicles. Now when the government announced the tax breaks for electric vehicles, the press headlines sounded really good, but we actually need to be cautious as there's a lot of tricks and a lot of traps that we need to be aware of. Now firstly, what tax are they referring to? They're referring to a tax called Fringe Benefits Tax or FBT. I've covered this off in previous videos, but very simply, let's say a business goes out and buys a vehicle for its employees that is available for private use. They have to consider FBT. Fringe Benefits Tax is calculated either on the total running cost multiplied by the private use or on the value of the car. So let's say, for example, I go out and buy a car worth $70,000 for my wife, has zero business use. I could be paying up to $14,000 a year of Fringe Benefits Tax, i.e. is a very expensive tax. So the government coming along announcing that it won't be subject to FBT is a very generous concession, i.e. that $14,000 wouldn't be payable. So what do we need to consider? The first thing we actually need to consider is a luxury car tax. Luxury car tax is imposed when you buy the car if a car is over a certain value. Now, this is done by the dealership, so a lot of people are not even aware that they're paying luxury car tax. For the 23 year, for electric vehicles, the limit is $84,916. So if we go out and buy an electric vehicle for more than $84,916, the dealership is adding a luxury car tax to it. Now this includes any accessories that are added at the time of purchase. So therefore, we're not talking about the high value electric vehicles being FBT free, we're talking about the lower value ones. The other one we need to consider is what happens if we go out and buy a second-hand car. Now this is actually where it gets quite complicated. So let's say previously a car was $100,000 when it was new, now it's $70,000 and that's what we're actually paying for it. The second-hand car at $70,000 is below the $84,000, but the legislation makes us go back to the time of purchase of the car originally. So if the car itself has ever been subject to luxury car tax, it's a $100,000 car, which has been over the $84,000. Therefore, it would have been subject to the luxury car tax, is not exempt from FBT. So prior to signing any contract to buy an electric vehicle, either new or second-hand, and you're thinking you're going to get this FBT exemption, always check with your accountant, because if we get it wrong, the taxation can be very expensive. Now, what vehicles does this cover? It covers off, firstly, the hybrids, but these are only covered up to 1 April 25. After this, they're going to be subject to Fringe Benefits Tax. The only slight concession is if we have a binding financial arrangement. So for example, let's say we've taken out a chattel mortgage, which expires on 31 December 25, it will be exempt up to 31 December. As at 31 December 25, let's say we refinance the residual, that's a new agreement and that will be subject to FBT. The other type of vehicles are the ones that are 100% electric. They are not going to be subject to FBT and that exemption will continue for those. So remember, prior to going out and buying an electric vehicle and signing the contract, thinking it's going to be exempt from FBT, always check with your accountant because there's a lot of things that you need to consider. If you have any questions, please do not hesitate to reach out. Thank you for listening. Mark Newman.